Hi, everyone. Today, let's talk about the economic calendar for the week. Then we'll talk about the options open interest for the quadruple witching that takes place on Friday. And then we have lots of long-term charts to go over to help give us a better perspective on the week. And then we'll go over my positions and my thoughts going into the next week of trading. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the economic calendar, nothing on Monday here. Tuesday, big day, CPI, regular and core. Looks like estimates right now for the month-over-month numbers is the same as last month, which is interesting. But year-over-year numbers are declining slightly, 6.4% for year-over-year versus 6.1, then 5.6 compared to 5.5 for core. And then we have PPI, again, expected to step down on the month-over-month basis, pretty substantially, actually. Looking at regular PPI, 0.7 compared to 0.3 expected. For core, you have 0.6 and then 0.4, so pretty good estimates. Interesting. A little bit better than CPI. Definitely something to watch. And then later in the week, there's not much on here, but it's always good to keep an eye on home starts, building permits. And of course, we have the Thursday initial jobless claims. This seems to be ticking up here recently, which is interesting. Generally, that should be good for markets, at least in the short term, until it becomes too aggressive and then it becomes negative for markets. And then looking at the end of the week, we have consumer sentiment, always something to watch. And then U.S. leading economic index expected to be at 0.2% compared to minus 0.3% from the previous iteration. Again, stating that the economy is at least fairly strong. And then in case you weren't aware, we have the FOMC statement here on March 22nd. This will obviously be very dependent on CPI and PPI. The Fed is going to make their decision whether we get 50 basis points or 25. Moving over to Max Pain here, you can see Max Pain still at $400 on the SPY, very high compared to current prices. That's $13 higher than we are right now. Highest put strike, $390, and you can see highest call strike here at $400 right here. So I would expect to finish between those two levels. Tons and tons of options in the markets here, almost 5 million options. Put call ratio still sitting just above 2, so still fairly high. You can see all of these puts here left in the market, generally meaning that the market is not going to go down too much. I could very easily see a finish just above 300, maybe just above 394 in this little rut that they have here. 395, 396 certainly would be a good spot for market makers. Looking at option maturity here, you can see that 380 put 233,000, huge number at 380. And then nothing else really compares here, 385, 390, fairly interesting. In terms of maturity, wouldn't be surprising to see a 391, 392, but basically everything here is pointing to bullish in terms of the options. Looking at the money here, you can see huge amount of money to be made if the market continues to go down, which generally means that it's not going to do so in my opinion. Doesn't mean we're going to get a 396, 399, 400 finish, probably not, but it definitely means that it's probably going to drift in this direction, at least a little bit on the week. Moving over to the charts, starting with the S&P 500 here on the monthly view, you can see we're still within this channel. We did break down from this initial trend line, but looking at the longer term charts here, you can see we don't have any major support until we get down to about 36.38, which is back at this previous low going back to October. We rejected from this upper trend line, and we're now moving down. If this shorter term trend does not hold where we are right now, which we could certainly see a shorter term bounce, definitely possible. But looking at these longer term trends here, you can see we don't have major support until we get pretty close to that 55-month moving average, which is currently at 35.80. So monthly chart pointing to more downside. Certainly seems like an area where we're going to get a move similar to what we had here from August into September, which certainly could push us back to that same low level that we were at before. And then looking at the MACD, it is still flat, just barely. And then RSI here, still pointing to the downside, still well below the SMA. Certainly in an area where you could see rejection and a stronger move down from here, which is interesting when you compare that to the option pricing that we just went over. Moving over to the weekly view here, you can see MACD getting very close to bearish territory, sitting right at that trend line that we were looking at. And then you have the 200-week moving average sitting down here at 37.25. Certainly could be an area of strong support, but you can see the last time we came here, we overthrew it just enough to wick that longer-term trend line. and then got the stronger move to the upside. So keep an eye on that. Even if we come into the zone, you might throw that wick down here just to get a little bit more support, a little bit more buyers, and then we see a push back up into this 38, maybe even all the way back up to 40.63. That would be interesting. But right now, all of the indicators are still pointing to bearish. You can see RSI is below the SMA. We actually overthrew it, which is generally pretty bearish. And then we came right back down, and we're looking to move back down to probably 36.18 on RSI. That seems like a decent level. Last time we had a move similar to this, we actually got into oversold conditions, which was pretty aggressive. I don't necessarily think that we're going to do that, but it's certainly possible that we come back down to 36.30. If we do bounce from here, then you should be looking for a retest of these trend lines up around 40.50. Moving over to the NASDAQ on the monthly chart, similar thesis, rejected from an upper trend line, moving back down to the lower trend line, which is about a 5% move to the downside from here. Doesn't mean that we're going to take out this previous low, but it does look like we're going to retest the 55-month moving average, which is currently trading at 1137. Just slightly beyond this trend line does make sense. They correlate very strongly, and that's what I would be expecting. A move down, a couple more percentage points, and then we see a little bit of a bounce. That would be interesting. Worth noting that momentum here is still a little bit more bullish on the NASDAQ, and if we do get a push through this RSI line, that would be pretty interesting as well. Wouldn't take much to see just a little bit of bullish price action, bounce above there, potentially retest the SMA, and then get a bounce higher. That would be very interesting. Something similar to this where you come down, retest, and then get a continuation down. Obviously, this was a bull market, but what we are seeing here is we've been very extended. We're just now coming back and retesting the SMA on the monthly view, which is your really first opportunity to get back into bullish territory on this indicator. Moving over to the weekly chart, fairly straightforward. Once again, you have the 21 EMA sitting at the 200 SMA, right down here at 11,700. Just a couple of points lower than we are right now. Certainly seems like we're going to at least test that level, if not overthrow it back to the trend line like we talked about, like we've tested multiple times here. Like I said, certainly could bounce from this mid-level and then push back up to the trend line, maybe even back up to the 144 EMA, which is currently at 13,040, somewhere in that zone. So it does seem, so the weekly view is showing a little bit more bullish price action. Momentum still bearish. RSI sitting right at the SMA. So this is the point where you would want to see it bounce. Maybe we overthrow it just slightly and move higher. That would be interesting. Similar to what we had going back to November, where we came down, overthrew the SMA just slightly, and then came back through and had a really bullish push. That would be a pretty ideal condition here over the next few weeks as well. But either way, monthly view still looking fairly weak. Weekly view still looking like there's potential for a bounce and a little bit of a push higher. Moving over to the Russell on the monthly view, the Russell is extremely weak, definitely does not look good. We threw a wick to that 21-month moving average last month, and then we've had very, very strong rejection back to these previous lows. Momentum on the monthly stepping down. You can see that exact condition that we talked about where we overthrew the SMA on RSI, and then we're coming back through it now. We have a couple points lower to where we find some pretty strong support, but if this breaks down, it's going to be a really, really substantial move to that next level of support, potentially coming all the way back down to test the 144-month moving average. Huge move down if that does happen. Definitely something to keep an eye on in the months to come. Zooming out here, you can see this longer-term trend line is very powerful, so definitely keep an eye on that. Certainly could bounce from that level, which is about 2% lower from current prices. But if we don't bounce from there, you definitely need to be out or trading bearish, looking for that more substantial move to that lower trend line. Moving over to the weekly chart, similar thesis. RSI broke through the SMA, looking very weak. Momentum stepping down very close to that zero line. Last time we got here, we did get a slight bounce into bullish territory, so keep that in mind. But right now, you do have to anticipate that this might be slightly bearish. We're below this longer-term trend line that we were watching. Does look weak. Certainly could just overthrow this, test that longer-term support, and then get the continuation. But like I said, be very wary of this trend line. If buyers don't come in, this could be a very substantial breakdown point, similar to what we had here where we broke down, came all the way down, even retested, and then made a lower low. So something like this is what I would expect if we did get below this other major trend line. Moving over to the Dow here on the monthly view, similar thesis. Through a wick to the 21-month moving average. We've consistently moved down throughout the month, looking at about 310 for your next major support on the monthly view. Certainly looks bearish right now, certainly could come all the way down to the 55-month moving average, which is currently at 298.16. That would be a pretty substantial move, about a little bit more than 20 points to the downside. Bearish momentum, but the moving averages are fairly bullish still, surprisingly. RSI, very weak. Came up, tested SMA, bounced off, tested once again, bounced off. Looks weak, looks like we're going to continue to the downside. And to me, here it looks like we're kind of accelerating on the monthly view. Moving over to the weekly on the Dow, you can see same thesis, looking at that trend line, looking at the 200 SMA. Those are really the only substantial levels that we have in terms of support. And that's really what you should be looking at for the Dow. It does look extremely weak. Momentum, very bearish. RSI, very bearish. So everything looks weak here on the Dow. Moving over to the ratios here, starting with the S&P 500 divided by the M2 money supply. You can see momentum has been moving in the bullish direction. The EMAs here are actually on the bullish side, slightly above the zero line for the first time in quite a while. But momentum is ticking back into the bearish side, so that's interesting. We're right at a support level. So if we're going to bounce, you definitely want to bounce now. Otherwise, again, we're looking at that same lower level in terms of support. We do have the longer term downtrend line sitting quite a bit lower than we are now when you look at this chart. But right now, it does kind of look like we're moving sideways. This chart does give you a better perspective in terms of sideways price action, in my opinion. You can absolutely hold within this range for quite a while. And it does seem like we're going to get at least a couple of percentage point move down, probably retest this level, and then we can get a continuation to the upside, something like this, where we came up, retest, and got the continuation. Similarly, come down, test, retest, get a continuation. Could be possible here. Momentum saying that we are going to be moving lower here in the coming weeks. But like I said, if we're going to bounce, you definitely want to bounce now. Moving over here to the NASDAQ divided by the SPY. We've been watching this flag here for a while. We kind of thought it was going to break down, but we ended up breaking out. So the NASDAQ has been a little bit stronger than the other major indices here recently. Looking at 306, definitely could go higher. We've been much higher before. But right now, this is still bullish. The trend is intact, and we should expect the NASDAQ to continue to outperform, at least here in the short term. MACD bullish, RSI bullish, getting fairly close to overbought conditions here on the daily chart, but still looks pretty strong going into next week. Moving over to the SPY versus the Russell, you can see we've been in this channel here for a while, and we had a strong reaction to this lower trend line, bounced right up to the most recent upper trend line. Certainly looks pretty impulsive, certainly looks like this could continue, meaning that the Russell might be underperforming here in the short term. Of course, we could get a rejection and move back down to these EMAs and the 200 SMA, certainly possible. But this is a pretty strong move here over the last week, and usually when you get moves like that, you should expect them to continue. RSI showing that this is going to continue, momentum showing that this could continue. Overall, looks like the Russell might be the weakest of the major indices going into the next few weeks. Moving over to stocks above their 50-day and 200-day moving averages. So we had a very strong move down on this last week. You can see how strong it was. Took out multiple weeks. The last time we had a move like this, it was going back to June of 22, where we came back down to this 10.75 level, very close to that zone. And then after that, we had a huge move lower. So we definitely have to be aware of that. Certainly could get a continuation like that, which was pretty aggressive. But also at the same time, last time we came to this exact level, you can see we went sideways for a week, slightly lower, and then we had a pretty substantial bounce before we had the continuation to the downside. So could go either way for sure, definitely at a trend support area. Zooming out here to give a little bit of perspective in terms of where we are, you can see 2018, this was a zone where we found support. We did throw a wick down to the next lower level before we got the rejection. Similar here, October of 2018, tested these levels, found a little bit of a bounce before getting a continuation lower. And then you have the COVID crisis where we got significantly lower. We don't usually get to levels that low. Even going back in history here, you have 2008 where we did get that low. And then here in 2011, we also got that low. So just a couple of times through history, we got much lower than we are right now before we did find at least a substantial bounce in the short term. Similarly here on the 200-day moving average, you can see we're coming into an area of support. This tends to act more like a trending chart. It still gives you perspective in terms of long term. You can see COVID crisis, 2019 dip, all coming down to that most recent low here from October. Then you have 2011 as well as 2008 and 9 where you got significantly lower. But in terms of right now, here we are looking at this 200 SMA as a potential area to bounce at 3907. So it could go a little bit lower before we find that bounce. Maybe come back up, retest the 144, maybe go a little higher. We did gap below the 144 here on the daily chart. Does look weak. Momentum is weak. RSI actually got into oversold conditions, which is interesting. We haven't been oversold here on this chart for quite a while. Last time we were oversold, it was back here in September going into October where we started to have that build. And then after we got that oversold condition, we did have a pretty substantial rally. You can see oversold conditions here in June as well ended up being a pretty substantial rally. So keep that in mind. We are in oversold conditions. Doesn't mean that it's going to happen immediately. You could still have a couple of days where you stay in this zone. Could even stay in the zone for longer. You can see here going from April to May of last year, we were pretty close to oversold and we stayed kind of within this zone. Keep in mind, 200-day moving average, oversold conditions certainly could get a short-term bounce and give markets a little bit of time to cool off. Moving over to consumer staples versus discretionary here on the weekly chart. You can see we're at long-term support here on consumer staples, looking for a bounce off of the 144 week moving average, sitting down at 70.50. So a couple more cents of downside potential. Expect a bounce off of that level, fairly substantial one to be honest. Momentum does look weak though. RSI does look weak. Interesting. We have building volume as prices moving lower, which is definitely not what you want to see. Similarly here on discretionary, we came up, retested the 200-week moving average, got rejection from the 55-week moving average. Everything looks bearish. We're crossing below the RSI SMA as well. On high volume, definitely not what you want to see. Momentum on the weekly chart stepping into bearish territory. Everything in the short term looks bearish, and you definitely have to keep that in mind. Discretionary looks weaker than staples, so again, indicating that we're most likely going to see more bearish price action in my opinion. And it seems likely here that we're going to go to that pre-COVID high, which is sitting down at 132.27, which is just above where we had this most recent low. Probably going to come down and at least double bottom at that level down at 127.76. So keep an eye on that. Discretionary looking weak, and staples seem to be looking a little bit stronger, definitely here on the longer time frames. Moving over here to the dollar on the daily and the weekly. Starting off with the daily, looks weak, looks like we're breaking down. This still is a bullish trend. You can see the 9 EMA sitting above the 21, so still bullish, but does look like we've kind of had a top. Maybe we make a right shoulder here, and then we break down at this neckline, sitting at basically 104.225. If we do break down from there, then we should be looking at basically 102.80. We also have a 103.65 level that's interesting. So it looks slightly bearish here in the short term. Looking at the weekly view here, you can see we have a strong wick rejection at the 21 EMA as well as the 55 EMA. Both of those look weak, most likely going to come down and retest the 9-week moving average down at 103.44. That's what I would be looking for. That also correlates with this trend line that we were talking about. It is worth noting that momentum here on the weekly chart is still moving in the bullish direction. We're above the SMA here on RSI, so still looks like it's bullish here in the medium term. But looking at the daily chart, you can see definitely some bearish price action coming in over the next week or so, in my opinion. Moving over to high yields here on JNK on the daily and the weekly. Starting off with the daily, momentum looks weak, certainly at an area where you could find buyers. RSI looks weak, momentum looks weak. Looking at the weekly chart, it actually looks more bearish. We're moving from bullish into bearish momentum. RSI below the SMA, volume picking up over the last week. So we had low volume on the rejection and the move higher, and then we have higher volume on the bearish week. Definitely looks like we're going to be moving lower. Potentially some support at 88.70, and then should be looking at the lowest area from this trend line on the weekly view, sitting down at 86.28. If we do get a move lower here, which does look like it's going to happen, we should be expecting lower prices in equities, in my opinion. Like I said, doesn't mean it has to happen right now. Certainly could have a bounce next week, but overall the trend is still bearish. Moving over here to the VIX on the weekly chart. We talked about the daily chart on the Friday video. Everything looks bullish here on the VIX. You can see on the RSI, we came down, retested the SMA, and bounced higher here over the last week. Definitely looks like a continuation style pattern, similar to what we had here from the August into September time period where we came up, retested that SMA, and then we bounced significantly higher. If that is going to happen, where we have a continuous big push up here, probably need to look at that same high level up around 34. Then we see a fairly decent bottoming pattern, and then we can expect to see some higher prices. Right now, the VIX is showing some bearishness, and we do need to keep an eye on that, especially with how strong this was. Similarly, here you can see when we came back up, retested at the SMA, and then got the continuation higher, went much higher back up to that most recent high at around 38. So definitely some bullish price action here on the VIX, and you have to keep an eye on this going into the next week, especially with PPI and CPI coming out next week and FOMC the week after. Moving over to current positions here, you can see I do have some puts. I do think we should get a little bit of a bounce into next week. We did see a pretty substantial bounce after hours. You can see NASDAQ closed at 288.55. After hours close was 289.30, so definitely a little bit of a bounce into the after hours. Certainly could happen on Monday. That would be great for these 290 puts that I have. I do have a 179 put out here for Wednesday. This is on my IWM position. And I do want to highlight, I have a lot of time on this. I will continue to roll this position to make money on it eventually. This is my IRA position, and I basically have an infinite amount of time to continue to roll this out and down until the market eventually closes above my strike price. And then I can eventually pocket all of this money the longer that this trade takes. So I'm highlighting that to say, if you are willing to stay in the trade for a very long time, like I am in my Roth position, then you can hold a position like this that's in the money quite a bit. But if you're a shorter term trader and you're doing things like the individual account, you definitely want to see a substantial bounce on Monday and play defense with either short calls or short shares in order to protect you from shorter term losses. Let me know down in the comments section what you think the markets are going to do next week. Are we going to see follow through on the monthly charts, or will the shorter term charts start to take over the next week? What do you think CPI and PPI are going to do to the Fed decision the week after? And then we have witching on Friday, big week this week. Definitely put your thoughts down in the comments. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.